How's everybody doing out there? Hope you're all blessed. And welcome back to ReturnUs, where capital meets possibility. I'm Marvin Clement.
And I'm William McCoy, co-host and co-founder of Karuti, a regulated crowdfunding platform. So, in this episode, we will dig into the story more that's inspiring. It's about instructive for smart investors. A black-owned AI company is transforming learning and development, not just for social good, but for return. That's what we're backing, and so that's what we'll be talking about today.
100%. And this is what I like to call investing in impact. This formula would look like AI plus impact. So let's get into it and let's see what we have for today.
Awesome. So this article comes from Black Enterprise that highlights this black-owned AI EdTech venture that is innovating in learning and development, not just building another LMS, but embedding AI instructors, scalable content, and bridging gaps in access and quality. And why is this important? Because again, talking about AI, representation in AI is going to be mad important for us in the future. Without representation, it's going to be hard for us to be able to scale or be on this battlefield, this AI battlefield with the rest of the world. And so having this black-owned AI EdTech company is a huge win.
Yeah, speaking of that AI company, let's talk about Skilldor. So we have Demario and Don Nicole McQuillan, and they've partnered with DID to deliver courses with AI-generated instructors. So, what does this do? It provides consistent, compact learning experiences, taken from blackenterprises.com. So they also deploy offerings, and these offerings have been deployed to predominantly HBCUs with no upfront cost. That's a key. No upfront cost for the institutions. So again, this comes back to aligning with the mission and scaling dynamics. Good stuff.
So this is not just a CRS, let's just be clear. This product is a distribution, mission-driven, integrated product. And the fact that it's black-led and targeting historically underserved institutions is a under-leveraged market signal that interest in AI is growing, investor interest in AI is growing, and you want to be a part of this as well.
100%. So, I know what some people are probably thinking out there. Generally when you hear the term like social ventures, you think, okay, passion project, but you think minimal returns. And, fair. But in this case, where value, scale, and market intersections collide, it's unmistakable that what the birth of that is going to be something that's actually very investable and can actually have very good returns and still function as providing impact.
Absolutely, Marvin. There's also some other things that we are considering here, or things that, along with that line set, is that market sectors and tailwinds are changing, right? Like they're coming in, they're showing us where things are going to be. So let's zoom out. Why AI EdTech is a compelling macro sector now? Well, let's break down a few things, right? Massive addressable market. Global e-learning from corporate training is already a multi-billion-dollar business, right? Industries and AI can compress content creation and personalize it and then scale it in minutes at times, right? Even in seconds I've seen it do it, right? So that's going to be important. Also, supply and demand mismatch. Many learners lack access to high quality training. Many institutions lack these resources to deliver it, especially HBCUs. We want to make that clear that this is a great deal for HBCUs who typically do not have these courses, or even may not necessarily have the professors. This is a way for them to go ahead and put that skill set in right away. And then automation, right? AI displaces roles, reskilling, continuing education becomes a survival tool. So being able to learn about AI, let's say you don't want to be an electrician. I understand that everybody's saying that electricians and plumbers and HVAC people are going to be the future, but maybe that's just not your thing. But if you upskilling yourself on AI particularly, it means that you are going to be in the survival for people who understand AI, and they're going to need your services. Cost structure benefits is the fourth one, right? Once the content / AI information is built, it's super cheap to deliver it. I mean,
Sure.
AWS, absolutely, Marvin. Go ahead. I'm sorry, you were going to.
No, I was just agreeing with you.
Yeah, I mean, AWS, Google, all those things now host your information for a little bit of money that can be delivered to people. It can scale up, scale down according to the demand. So again, cost structure is great. Platform effects, right? Learner networks, institutional embedment, data feedback loops, retention, all naturally lock-in factors that are going to be important in this AI EdTech, particularly targeted and owned by Blacks.
Yeah, definitely in this ed tech space. What we're seeing is not necessarily selling content, but it is selling a transformation. So AI just seeds the engine, and the engine is moving in a direction, and it's a good one.
Yeah, absolutely. So, why backing Black-led AI tech is a differential, right? Um, well, tilt your exposure to Black-led AI tech because it's a good idea as everywhere, right? Backed ideas are rare. This gives you an asymmetric upside. Undercapitalization, inefficiency in allocation. Many Black founders are underfunded relative to their concept quality. Again, there's many studies out there that shows that when a founder is diverse or is a diverse company, right, they outperform their competitors in many ways because they've learned to bootstrap and do those other things. They're very efficient a lot of times. Unique market trust and insight. Founders from underserved communities often have deep insights into the learners and the learners' pain points versus ones who are outside of that community. That's a huge thing, right, Marvin?
For sure, for sure. I mean, you don't get extra returns for just because you're a black founder. Just for us to be clear, but you do get extra alpha because no one else saw the pipeline, the trust, the bridge that you already hold. It's definitely some. I don't want to say we can leverage, but it's just something to think about.
Absolutely. Diversity networks, right? They open up doors to communities and schools and partnerships that the generic players just can't do. And then again, we're always going to go back to that mission alignment that's there for capital. And then finally, narrative premium and media and adoptions. What does that mean? Stories of first, representation, etc., can amplify the vision, can amplify the recruiting, can amplify the branding effect. And we know right now that with so many people thinking about entrepreneurship or even thinking about, let's be more clear, alternative investments, right? There is a big push for things that are first. We gave that example of a fan base who the CEO is designing a system that is going to be for everybody to be able to use, but he saw a particular challenge when it came to black founders and not being able to receive the same funding or just being taken off. Same thing with Karuti. Again, we're one of the first, or we'll be one of the first crowdfunding platforms that is representative of minorities and the struggles that they face, particularly when it comes to funding. And what we saw was that by adding real estate as a backer, it helped reduce the investors' worries and made it a lot easier for founders to go out. So that premium, that idea, that representation is going to be super important to you as an investor when you're looking at potential investments.
But okay, so sounds good, right, to the layman, but everybody always comes back and says, what about the risks? What about the mitigation structure? What are your ideas on helping mitigate risk?
Yeah. As always, there's always going to be risks, right? When it comes to any type of investment, SEC and FINRA wants us to be very clear that there's always risks when it comes to investment. If you go to Karuti.com, there's an area at the top that says disclosures. You can read through the 9 things that FINRA says that we want you to understand as an investor when it comes to risk. But you can also go through and read a bunch of other things that are educational to you as far as an investor. And this will be helpful to you when it comes to mitigating your risk. But when things that you want to look for is about a few things, right? So team and domain alignment, right? Do they know what they're getting into? Do they have experience or someone on their team with experience when it comes to this? I don't care, like if it's in EdTech, for example, it could be someone who was a teacher, right? Who understands the struggles, who then is matched with somebody who's a technology person who understands AI, and so there goes your team, right? That doesn't mean that that's all you need, but that would be an example of alignment, right? Content and quality, AI tool, not a product. Content must deliver outcomes, right? It's measurable, right? You can see that this is going to end up multiplying this or scale up to this soon. institutional partnerships or pilot clients. So things like with this EdTech company, they already have partnerships with HBCUs. They're already piloting this. This helps to de-risk, right, or reduce risk, as it were, when it comes to your investment, and you're looking at an investment. And then unit economics. How do they make money? How many learners would it take for them to break even, right? What is going to be your potential return on investment if you put $100 in 10 years, doing it with their model? How would your money be more money than that $100 that you put in initially? What does it look like? They should be able to clearly say that. Scalability as well, right? You want to make sure that they are looking towards the future. A lot of people say AI, but they're using AI that is right now. They're not thinking about what AI will be able to do in the future, and they haven't designed the systems to be able to do that. So you want to be able to ask questions about, hey, look, AI, great, you got some AI in there, but how does that AI scale to the future? What things are you looking at in the future when it comes to AI? Or what are some examples of what AI could potentially do from now to there? At least you know that that founder is looking at the opportunities. And then governments, right? Everything from the compliance that they have in place, looking at their documentation, looking at their disclosures, to make sure that they have written supervisory procedures, right? Like in case of this, in case of that, you want to be able to see they have these things in place. And then finally, what is their exit strategy? I don't care if it's an acquisition. I don't care if it's an IPO. They should be able to tell you some exit strategy, because as an investor, you want to return to your investment. And if you're not able to sell your equity in the secondary market with that company, then you want to be able to see a pathway to an exit to be able to get your money back out of that company as a return.
My man dropping gems on the folks. Yeah, these are all key components to risk mitigation. And folks out there, just always remember that the biggest risk isn't the idea failing. It's the trusting the idea without knowing how it'll pay. So always, always, always trust the process, but also put the places and safeguards in that secure your success as best as possible. Now let's
So
talk
real
about
quick, go ahead.
Go
Yeah.
bro.
No, I was going to say, let's talk about the playbook. We always give them a playbook, right? So
Yeah.
let's talk about the playbook when you're talking about deploying capital, even in this type of situation, right? Co-invest, curated platforms like the upcoming Karuti platform, which allows you to crowdfund your investment, but also diversify your investment across a few companies. That's going to be important. Making sure that you understand how the SPV works, special purpose vehicles that typically go around with crowdfunding. How does that work? What does that mean for you? Matching your capital, or making sure that you anchor your capital that attracts investors, that they're doing that. And then also take it to scaling. Start with small things, test out, see what the winners are, maybe invest in a couple winners, right? See how that looks. And then support beyond the money. Once you put your money in, you should be going out telling everybody at that point who's in your sphere. I don't care if you got 10 people on your Instagram or 1 million people on your Instagram. You don't want to hide the fact that you've invested in this company. You want everybody to know, to help them also see the benefit that you have seen, right? And then also keeping that capital reserve to support the growth of that company or your winner later on, because they're always going to be follow-on investment that they're going to need. Now, one of the great things that we have, again, I want to make sure that people understand the difference between us, is that we saw this as an issue, follow-on investment. And what we did is we made a thesis that all the technology companies that you're going to see on Karuti.com are going to have real estate attached to them in some way or form, whether it's a piece of land or a building, that will allow these founders to be able to take advantage of what we call follow-on investment. So whether that's a conventional loan or some type of mezzanine debt, or even follow-on investment from other VCs, private capital, whatever it may be, having that real estate asset makes it a lot easier to go out and go get follow-on money.
100%. Just capitalizing on something said, we talked a lot about money, and money is necessary. We're not going to sugarcoat that. Raising capital is necessary, but the real network multiplier is your network. You've heard the term, your network is your net worth. So, reiterating what Will says, you don't know who's sitting around you and how much they value you and your idea. So the investors who help carry your vision win more than those who just cut checks. Definitely speak your vision into people, and you'll be surprised at how far your vision will grow. Social media, gym, family, it's all available to you. It's all around you.
So that's been an episode this week, guys. Thank you for following us. Again, make sure you check out Karuti.com where we have some examples. We will be launching hopefully soon here. Those are not investment pieces. We just want to make that clear. There is a risk when it comes to investment, but we show you actual examples of what it will look like, companies out there, and then continue to follow us on ReturnUs.com. That helps support us, right? We're not asking for anything else. We just want your support in making sure that people are aware of the different opportunities out here, particularly around crowdfunding and alternative investments. And we hope to have you guys on the next episodes.
Take care. Invest smart.